low, low, low. Everybody! Apple bottom jeans, boots make the fire. Oh, the road club is ready.
Hello and welcome to the Closing Beat. Happy Monday, everyone. That was pretty cool, huh? Little widgety thing going on there. Did you catch the movie stuff from Thursday's show where I was mentioning the movie quotes? I tried. I got 14 of them, right? 14? I got 14 of them. So I tried to spit out as many movie quotes as I could without you guys catching. And I think we posted something on Instagram. That was kind of fun. We have financial advisors here at Jazz Wealth, and as you can tell, we're fun and friendly. We are not suit and tie and stuffy there. So hopefully you'll check us out at jazzwealth.com. We also like to teach, right? So it does us no good to just say, don't worry, trust us, we'll figure it out. We like to teach along the way as we're doing things. We do that in our Wine and Wealth classes. And we're going to teach you a lot today. We are going to teach you here. Let's start with today, right? Shall we? So the S&P yet higher again. Actually, all major indices were higher on the day today. Today, though, it was all tech and financials. Is that good news or bad news? Good news or bad news? It is not good news, right? So if we look over here, we've got the sector breakdown over the course of one day. Tech, financials leading the way. If you look at financials inside of that, by the way, if I could just go back, half the sectors didn't even participate today. So rally on thin air. We don't want to see that. We want to see broad participation, people chasing themselves to buy more stock. You know, that's what we want to see. Nope, we had half the sectors participate today. And in fact, there were only two that gained more than 1%. That'd be tech and financials. Financials gets a pass because it's earnings season for them, right? So if we sort by day, we could see that the biggest contributors today were JP Morgan, Berkshire Hathaway, etc. However, new little thing in here, I don't know if you can see it, but when the dot is bigger, these are the sub-industries. So basically, if I go away, the big black dot, the big green dots over there, those are all related companies. They're competitors, essentially. So you could see, well, hey, it was JP Morgan and the big banks today because they also participated. What else could we look at? Well, it was the insurers like Progressive today and the rest of the insurers. So kind of cool to see that. But I don't like when the market only goes up because of just a couple sectors there. More on that to come. Because we're going to talk about a big change there in the NASDAQ. Okay. Also, we have a little bit of a trouble here. So last year, it is not a joke, last year, almost every other day was a gain or loss of 1% or more. In other words, a bigger day. It was either a big gain, big loss, but 47% of all days last year were either a gain of 1% or more or a loss of 1% or more, meaning there were very few little tiny quiet days in there. So this year, we're only trending at a 30% rate, meaning volatility in the market is calming down there and is actually slowing. Now, also by month, we tend to see, we tend to see smaller range days around this time of year. So this may be a seasonal effect. So for example, out of every year, if we just use the average of every year, about 21% of all days have a gain or loss of greater than 1%. The exciting days that you see on TV and we all talk about. Why? What happened, right? So January is pretty much average, February average, March average, and then we start declining into the summer months. Very normal. As we get through the end of August and into the later part of the year, it starts to increase again. So far for July, 18.8% of all days on average have a wider range, more volatility, more excitement, things that would get you to think, I should buy, I should sell, right? We're just not seeing that right now. So if I could maybe compare the 2 years. We look at the average volatility so far this year, about 40.92. Last year was double that. So we have declining and low volatility here at the moment. And we know it's going to pick up after the summer, right? You get more action when people come back from vacations and stuff, but you know, it makes you think about this being just a little bit suspect there, does it not? If I could bounce around inside the S&P here real quick, if you'll humor me on this. If I go over to energy. So the energy sector here today, actually, if I could just zoom out, you see the energy sector waking up here, just ever so slightly starting to wake up. If we zoom out and we say, well, what's good here? What are the big contributors? It's just a group. See them there? They're in the bigger circles there. It is basically equipments and midstream participants in the oil industry that are leading the way. Other than that, look around. See down here in the bottom? Not much going on there, not much down here. Light gains, but not really anything that's contributing a lot to it. So some of the names, or really, there's only a small group of names that are leading to this. Schlumberger, you look at Halliburton, right? Big rally off the lows there, and Baker Hughes, come on, baby, there it is. And so just a handful of names really contributing to the gains here. Careful in the energy sector. I know it's exciting, but look at oil today back 1%. This rally right here was not fully participated in by the entire energy sector. So is it time to go all in on the energy sector? It's not looking that way, on only just using the data there, not my belief there. If we look at the Russell 2000, yeah, small caps continuing to do their thing here. Now, technical traders will say, uh-oh, we're within 2% of a previous area where the Russell struggled a little bit. That doesn't mean it's going to struggle there again. It just means that's something that you've got to take a look at. And time that with having a 10% rally from the lows there, or now 12% actually after today there. And we can look in the research site. We won't do it today. I won't bore you that. But if you look in the research site, you go, okay, well, what happens when it has like a 12% rally into highs there? Weaker returns, right? Very limited returns. There's a high probability that we get up here and the technical traders, the analytical traders, the quant traders look at all this and say, I don't think I'm interested in that so much, so maybe it calms down in there, and that would be totally normal. I might also point out that if you're in our research site and you decide to participate and look that thing up, go through the performance over the 1 month, sort by negative, and you could see that it's not all related, not a lot of them actually, related to the financial crisis or during COVID. Remember, we found that last week where we were looking at data, but then we go, oh, wait a minute, all that data is from really sort of black swan or outlier events there that aren't part of more of a smoothed out average. So something to take a look at. Okay, I'll point out the NASDAQ here because we're going to talk about this for a second. NASDAQ has hit new highs there. So on next Monday, wow, yeah, next Monday already. Jesus, okay. So Monday, the 24th, the NASDAQ will complete what is called a special rebalance. Not a normal quarterly rebalance, but a special rebalance for you. And they've only done this one other time in history. And before I get to the inevitable question here, in 2011, they did this before. Almost no real impact on individual stocks. This time could be ever so slightly different. So we're going to dive into it just a little bit. The reason they're doing this special rebalance is because the top 7 stocks in the NASDAQ account for now 56% of the entire NASDAQ. What have I been complaining about this whole time, right? I've been with you guys. I'm like, this is weird. There's only 7 stocks lifting the market. Well, the NASDAQ legally has to address this to be considered a diversified index, and they also have to address it to be considered a benchmarking index, which they, of course, want to do. They've done this since 1993. They obviously, if you're around from that time, they fulfilled the obligation to become a diversified index, which could be considered as a benchmark. And about 2 weeks later, they came out with the QQQQ, which is now the QQQ. So a little history lesson there for you. Anyways, here's the breakdown of how this is going to work, because you know I've always got stuff that's a little bit better for you, so you know what you're talking about. Currently, here is the breakdown of the stocks that make up over for just about 50% of the index there. And color-coded, right? So we got NVIDIA, Amazon, Alphabet, which is the first class of shares there, the Apple, and Microsoft. If you throw the next one in there, you now have the second class of stock, right? So they're going from these percentages to these percentages here. It's interesting, right, to look at, but I have more questions when I see things like this. Okay, so Apple is going to take one of the bigger hits percentage-wise from 12.4 to 11.5%. Think about it for a second. If Apple is going to be smaller in terms of its weight in the NASDAQ, Well, then what about the index funds? What about the mutual funds? What about the actively managed funds that are really just kind of guiding along with the NASDAQ? Don't they have to adjust as well? Yeah, they're going to have to sell. And actually, they've already started that. They're going to have to sell and put that money elsewhere so that their percentage no longer is at 12.4%. It's at 11.5 or somewhere very close. So here's a breakdown. God, I hope you can see that. Here's how this is going to go. Don't let it scare you. You got Apple, and then just put the name there in case you're not familiar with some of the bottom tickers there, if it's not as popular. Year-to-date returns, 1 week, those are just givens. When we run the scan, that just happens that way. We don't change that. So you're always going to see that. All right, so in the S&P, Apple is 7.5%. In the Russell 1000 Growth Index, that's 12.9. We're interested in the NASDAQ because they're making changes here. We're going from 12.1 to 11.5. That is your change there. And then a step further, how many billions of dollars would need to leave the stock to be rebalanced elsewhere? It's about $1.4 billion. And one extra step further, average daily trading volume. 13% of the average daily trading volume would be rebalancing dollars. So I'm trying to put this in a perspective so you can see, oh, it's not going to have some big colossal down move that is based on the rebalancing. Certainly Apple could announce some disastrous news and that could change things, but no, that's not the case. As you work your way down, you can see Microsoft, 79% of the average trading volume. This is getting one of the bigger shifts here. So I wanted to just have a breakdown for you so you could see. Now that money has to go somewhere, and it's obviously going down here. So here's the additions, those that will become larger in the NASDAQ. Notice Pepsi going from 1.7 to 2. Broadcom, which was a popular one in the NASDAQ's post about this. I don't know why, but that's going to be adjusted there. And the most obvious one is NVIDIA. Because of its monstrous move there, it has now gotten itself up to 7.3%. They're going to bring that way back down, 35% of its average daily volume, and about $7.5 billion coming out of this, I don't want to say stock, I would say this allocation to the stock, and moving elsewhere down here towards the bottom. So maybe a little bit more of a breakdown than you will see anywhere else from people that maybe just pretend to know what's going on there. I did want to point that out, though, that in 2011, Apple was one of the bigger problems back then. So Apple went from 20% to 12%. So this is not odd, right? The adjustment here is much smaller. So if there was very little impact then, you expect very little impact then. And I might also point out that Apple and Microsoft, so Microsoft went to 8%, and Microsoft and Apple both underperformed in the short term, but they did not collapse and fall apart. There was no opportunity there. And so, by the way, the reason we're doing this is because when you put that together with everything being overbought, only a few sectors participating, everything else just floating around, how do you have a recipe for this being higher? And if I could tell you one quick story, I'll keep it short and then we'll do the stocks in the news, but if I could tell you one quick story. This weekend, I took Eric to see some clients. I have a little tiny plane, and we flew up there. I dropped him off, came home. While I was up there, there was a very nice jet and two pilots standing there, and their shirts said Howard Capital Management. And I was like, oh, hey, Doe Straight, what do you do? So this is what this person does. They are some kind of advisor that knows all of this extra, or has all this extra money. They manage a lot of money. And we started talking about that, the rebalance there. He had no idea. He had no idea. Could sell the devil out of annuities or whatever they're doing there. But just like to share a little bit of extra information if and when we can. Extra information here today would be stocks in the news. Activision. So this is a continuation of the rally here because the U.S. courts are not going to allow the, let me say this right, the U.S. courts are not going to allow the FTC to block the deal between them and Microsoft. Legal jargon there. Nonetheless, this deal can go through, at least at the moment. Stock that I honestly know nothing about and don't care to know anything about here, biotech stock. These guys got, so if you don't know me, I really don't care much for biotech stocks. I know I have to include them and use them. Just my eyes gloss over. I'm not interested. I'm not sitting there with the FDA. I don't know what they're going to decide. And these stocks have the biggest moves, could have been the other way as well, on this kind of news. And I don't want to gamble with something which is truly a gamble at that point that I don't really know what's going to happen. If you are a fan of cardiomyopathy, they saw positive results there. And I don't know why you would be a fan of cardio. I'm sorry, I shouldn't have said it that way, but that is the results of that. Tesla, apparently the first Cybertruck making its way off the lines there. Let's see how many more make it off after that. But that is officially underway there, finally. I believe it was 1.5 to 2 years delayed, but the man is a man of his word. He got it done and did not change the style, by the way. It looks just like he said it was going to look and what they showed. Paramount, they own, well, part of what they own is National Amusements. So they own Nickelodeon and everything, and movie theaters and everything. Did the Paramount tour out in California some years ago. They're going to be needing to restructure the debts from National Amusement. I wouldn't be surprised if you see an offer for that part of their business, not Paramount, for just that business. And chances are that's in the news right now because, well, there's that whole writer's strike thing going on and the actor's strike. Lastly, Ford, late day edition here. They, if you like the Ford Lightning, you know, you're getting a $10,000 cheaper Ford Lightning. So, you know, have at it. I don't know. The electric one, right? I believe it was the electric one. Yeah, it's the electric one. 17% cut there, $10,000. Probably still not worth it. It's just me. Just saying. Okay, I'll take your questions if I have any questions. Otherwise, tomorrow you got Bank of America, you got Blackstone, you got Schwab, Hasbro, Lockheed Martin, Morgan Stanley, PNC Bank, Prologis, J.B. Hunt, all reporting earnings. J.B. Hunt being the highest odds of those names to beat on earnings and have a positive return at the same time. In other words, be higher on a positive earnings report. So there you go. All right, here we go. Microsoft, when will it go down? I know, right? I don't know. Yeah. Doc likes the good stuff. I like making the good stuff. Kirk's got some dough in a savings account. You can do better than 4.5. Keep searching. Not going to be like John Kerry and say it's your wife's plane. No, because if you saw it, you'd be like, oh, that's so cute. You wouldn't be like, my man, he's a baller. I like flying the thing. I don't want to sit in the back. I want to sit in the front and get to work. I like that. Oh, Kirk doesn't like it. I've seen a few of them, but I don't know if they were electric. That part I couldn't say. Dustin, you are in the same position as this Dustin. Discounted, discounted, undervalued, but reasonably priced positions are very hard to come by unless you know something. You know what I mean? Yeah. Verizon or AT&T, huge down days. Saw that. I actually had a handful of people ask me today. So in the short term, you've got AT&T and Verizon, what you call like a waterfall, parabolic, climactic type decline, just depending on what school of technical analysis you're from. And those are attractive from that standpoint for short-term oversold positions that are probably a little bit oversold due to the lack of volume and interest and news going on in the market. That would be my thoughts there. Yep. Tom says option on an option wheel strategy there. Sold to put to open target. Okay. So let's see. Is that done? Are we all happy to go back to target now, or is that a thing, Cody? Do you know?
Got you on delay.
The target thing?
Yeah, we can go back. I was there over the weekend.
That's fine. Okay. I didn't know. I can't keep up with everything. Okay. So you can trade target and stuff. We're fine with that. Like let bygones be bygones, I guess. 125 puts. Okay. So you're under the depending on what you got, you're under the lows there. In August, premium, what are you saying? $1.30? Are you saying $1.30? Let's see. August 11th. I don't like the weeklies myself. That's just not my thing there. Yeah, you're saying $1.30. Okay. So 125 and then $1.30 puts you under the lows. You can't argue with, like, if my opinion were, and it would be this would be my opinion. I don't know that it's going to bounce, right? There's just nothing here to suggest the gray skies are going to clear up, right? I don't have anything. However, if you want to take that shot, nothing wrong with that. I really like that your average cost is below the lows. So I can't fight you on that one. I would say that's probably what I would have done. It's just I wouldn't have picked it. I would have went to something like AT&T or or Verizon and said, holy cow, this is so oversold. I don't know that there's any play to be had on AT&T, so it'd probably be something like a Verizon, and just you bet that this is not happening. This is a falling knife that has had its largest decline, as extended as it's been, with the highest amount of volume, tends to signal that the panic selling or the aggressive selling is pretty much washed out. Yeah. If I missed some questions, I'm sorry. I got on a little rant there. Cody he bought that one swimsuit from Target. That was that one.
I was just wondering how he knew about it.
Yeah, he knew. We
He
saw
must
you in there.
follow me on social media. I try to keep people from seeing that, but yeah. that's my fault.
You don't even need social media. You know when you watch like the murder mystery shows and they're like, oh, here he goes into Target. He bought a shovel. He bought gloves. Why did he buy that?
It's true.
We
Yeah.
saw it. You went right to the back. You bought that special swimsuit, and I think it looks good on him. You know,
Thanks. I appreciate that.
Yeah. He needs to hear that every once in a while. Inflation down 3%, so why talks this year? Market's red in a big time. My wife is back to Target. Oh, sorry to hear that for the money side of things there. So inflation's going to go up. I keep saying that. Maybe we could make that, if one day this week seems slow in the market, I will go through the actual math on that with you. But unless we have flat or declining month-over-month inflation, this coming report, the headline inflation number is going to go up. And it's just a math model. It doesn't mean that inflation now is suddenly higher. It's just because we're dropping off the June 1.6% month-over-month increase. So I'm really kind of curious how the media handles that. 'Cause I think we all know, I mean, inflation's not flat now, right? It's at least still slowly climbing. What are the chances of a stock falling 80% to be able to recover from its original price? Well, there's lots of examples of that, but those would be more mainstream stocks, NASDAQ, S&P, Russell stocks. There are unknown amounts of penny stocks that have fallen 80% and are still working their way back, if at all. So it depends on how you want to filter your criteria for that question. Opinions on the healthcare sector, all red last few days, and you started to add to Merck. Okay, well, so I don't blame you for adding to Merck because you are probably like me in this case. You go, I like a little discount. I'm willing to take a shot on some things there. So I don't disagree with you on that one. Healthcare itself, though, you're not relying on, so think about it this way. What's weak on the way down without the sector is not likely to just rocket back up if the sector goes crazy. In the same respect, if the sector gets weak, it's very unlikely that Merck is going to take some large beating there. So you're not really correlating the two at the moment because you have relative weakness in a quiet sector. Something we used to play a lot in the world of study time and kind of go over the scenarios of how often does that happen. If we have an outlier stock that's just sort of bleeding lower, but the sector's quiet, there's nothing going on there, how often does the sector fall and the stock go further? And if by so, how much? Yeah. You want to buy a put to hedge the Qs. So it's not something I'm ever going to suggest. I don't see why you would pay to hedge a position when you could just reduce the position. So that's not something I'm a fan of, but there are plenty of examples why you could do that. You could have a large capital gain. You don't want to realize it, but you do want to protect from some downside, in which case the put would cause you a little capital gain, but not enough to really matter. So I'm not saying you can't do it. It's just not my favorite strategy if you take taxes out of the equation, which, remember, for us most of the time, we're tax advantaged accounts here, so we don't have that as a horrible consideration. Opinion on Moderna, lots of cash on hand, outperformed the XLV in partnership with MRK. So I don't follow this sector a lot, to be honest. It's not my cup of tea. So I would be looking at it from just a purely technical side of things. And this falls into the same category as the previous position where we're saying, it's like Target. I don't know why this would bounce now. It's clearly not bouncing. So my thoughts would be, let it bounce, and then I'll take a look at that point. I'm willing to miss out on this first 4% or so to see that other people, like over here, I'm willing to miss out on this to see that other people are playing along. I'm even willing to miss out on this to see that other people will join me, I'll take the last piece. You know what I mean? When the stock is down like this, you know what I mean? Just to give you an example. You think your calls are doomed for disaster after tomorrow. So of the last 8 earnings reports, the stock has only been lower 2 times. The bad news, it was the last 2 times. So I don't know how to tell you. No, I'm sorry. It was am I looking at this backwards? Hold on. No, it was not the last 2 times. So the last 6 times the stock has been higher. That's better news for you. Okay. All right. The last 6 out of 8 times the stock has been higher after reporting earnings. The 7th and 8th time ago, those were the 2 that were down. So it's on a bit of a streak there. I tend to be the guy that's like, ooh, I don't like that. That streak may come to an end, but I have nothing statistically to tell you you're going to be doomed for disaster. I would not say that. J-Dub says, other than getting under 21 days till expiration, if you're in the money at 35 days till expiration, do you wait to roll? Nope. We're just right around that 20 days, and it's just because I've been stuck so many times that at first it was like 10 days. It was years of practice. Like, is it 15? Is it 20? Where in the heck is it? And I just kind of settled right there to go 20 days, you know? And I get it. That's a little weird to say, but if you put on something that's 35 days to go, that means you probably just put it on and you got affected by earnings, news, or something like that. So I would not adjust. Yep. Other than rolling. Yeah, there you go. So we understand each other. There you go. Keith, what plane do you get? I ended up, so I have, well, it needs some work now after this weekend, but it's a Cirrus SR-22. I wanted to get there faster, and it pretty much does that. There you go. Now, not saying you can't go under 20 days, by the way. If you were in Bank of America right now, well, not right this very second, but let's say last week you were in Bank of America and you were just in the money, with earnings coming up, you very well could roll. I found that a little bit too hard to keep track of myself. If you have a portfolio of 100 positions or something, you're like, I don't know. I don't want to look up earnings every single time. So use that hard and fast rule, and it makes things a lot easier. Keith, yeah, that's one word I would use for it. I'm very happy. Coming from a Cherokee 140, I'm very happy. Yep. You got it. All right. So we will look at the markets each day this week and see if there's something boring or there's nothing going on and I don't have a lot to talk about. We'll go through the inflation numbers and I'll show you like mock examples of different variables. Like if it comes in at certain numbers, how do you calculate what the actual number would be before revisions? They can revise the number, which they did last month, to whatever the heck they want based on whatever they find out. But the initial mathematically driven number, we'll go through that in case you're curious. Sound smart in front of your friends and all that good stuff. Okay, I'm going to wrap it up there. You guys enjoy the rest of your day or evening, and we'll see you tomorrow again. Adios.
When you wish upon a star, makes no difference who you are.